Hello everyone, welcome to another Crypto 101 video, and today we're going to discuss about decentralized exchange. We're going to discuss about decentralized finance, and I'm also going to talk about automated market maker. Okay, so what is a decentralized exchange? A decentralized exchange is an exchange that operates in a decentralized way, which means it has no central authority. Okay, so in that case, it allows peer-to-peer trading of cryptocurrencies. Now, some exchanges claim that they are decentralized, but they still operate the same way centralized exchanges operate. The likes of Bitcratic Exchange, the likes of Etherflyer, the likes of EtherDelta and Fork Delta, and even the likes of Bamboo Relay and other relays. Okay, then we have the automated market protocol, which is the likes of Uniswap, SushiSwap, and even MoneySwap. Okay, now part of the reason of doing this video is to enlighten you guys so that you guys understand what is currently happening right now in the cryptocurrency space. Okay, and part of what is happening right now is rallying around decentralized exchanges that run the automated market maker protocol. All right, now you may be asking yourself, what is a market maker, or what is an automated market maker? First of all, a market maker, when you go to your normal exchange and you see the order book, you will notice that there's the order book, there's the buy order, and there's the sell order. Okay, so a market maker is the person that introduces liquidity into the market. Okay, so when somebody buys a token, okay, what they are doing is that they are setting the price. So if a token is listed for the first time, the first purchase that is being done there is being done by a market maker. The person is considered a market maker. All right, so the person provides liquidity, while the person who sells the first time is being seen as the market taker. So when a market maker comes to the exchange and buys an asset, while the taker sells asset to take another asset out of the exchange. Now, not in order not to confuse you guys, let me dive straight into what an automated market. Let me dive into decentralized finance. Okay, then we'll now come back to automated market maker. All right. Okay, so decentralized finance. What is decentralized finance? Okay, before I read what I have here, okay, exchanges like Binance, Coinbase, HitBTC, all these KuCoin exchange, all these top exchanges, what they have in common is that they are centralized, and they have a lot of investors who are investing heavily in them. Okay, and with those funds, okay, they tend to offer you a market making account, or they have finance, okay, to back whatever they are doing, okay, to back the liquidity of cryptocurrencies. So that's why when you want to list on those platforms, okay, they have either required to pay a huge amount of money to list, or they have a high requirement for you to list before they can even talk about offering you the opportunity to trade on their platform and access the liquidity on their platform. All right, so well-funded centralized exchanges have made it difficult for a lot of cryptocurrencies that came up to be able to access exchange services. Okay, hence what gave birth to decentralized exchanges. And decentralized exchanges right now, okay, part of the problem with decentralized exchange, which most cryptocurrency participants love, part of the problem that they have is the lack of liquidity. So with the introduction of decentralized finance, what it has done is that it has created a peer-to-peer finance method. So instead of looking for big corporates that will invest in the cryptocurrency or exchange, you now have individuals who have interest in certain coins and who go ahead and invest in those coins. Okay, so when they invest in those coins, guess what happens? When they invest in those coins, okay, what happens is that they earn transaction fee. Now, the transaction fee that is meant to go to the centralized exchanges now goes to the liquidity providers. Okay, but decentralized finance does not work on all decentralized exchange the way it's meant to work. I get what I'm saying? Because some decentralized exchange like Bamboo Relay, Bitcratic, what's it called again? Ether Delta, Ether Flyer, all these exchanges, what they have does not give room for independent liquidity providers who will come and render peer-to-peer finance. Okay, so decentralized finance, which is also called DeFi, refers to the shift from traditional centralized financial systems to peer-to-peer finance enabled by decentralized technologies built on the Ethereum blockchain. Okay, so like right now, there's about over $7 billion worth of value locked in the Ethereum smart contract. Okay, so with decentralized finance, anybody who has funds that want to make money can decide to go and invest in the liquidity pool, okay, and make money from that pool based on the fees that is being generated. So if you have a coin that is trading heavily, there will be enough fees daily that goes around to those investors. Okay, so hence for decentralized finance to work, it works very well with exchanges that have what is called an automated market maker. Okay, so let me dive straight to automated market maker. So I just have an extract from an article I saw online, okay, because I believe this extract explains it very well. Okay, so what does it say? An automated market maker makes it possible to list and exchange digital assets. Now remember, with some decentralized exchange and also some centralized exchange, you cannot just list any coin, okay, and trade it. You cannot just list any coin and trade it. Okay, even when you list, or you also have to pay a fee to the exchange for them to listing fee for them to list you. But in this case, with an automated market maker platform, okay, you can list any cryptocurrency as long as you can create a trading pair for those cryptocurrencies and have a liquidity pool or liquidity providers who now invest in the exchange, that trading pair. Hence, any action that happens within that trading pair will lead to those investors earning from the transaction fee. So, an automated market maker makes it possible to list and exchange digital assets without the help of an order book. So, in this case, there is no need for an order book. Okay? Unlike decentralized exchanges, there's nobody putting in ask and bid orders for an asset. So, some decentralized exchanges which use order book, what happens is that somebody has to put in an a buy order, and somebody has to put in a sell order. Okay, but in the case of automated market maker, there is no such thing. There's nobody putting in a buy order or sell order. Okay, there's nobody doing that. Okay, so a formulaic approach is used to determine the price of an asset. What this means is that the price of an asset in an automated market maker product moves only when a trade occurs. As such, may be less susceptible to external manipulation. So what this means is that instead of relying in the old method, okay, where you have the order book and somebody has to put in a buy order and somebody has to put in a sell order, okay, in this case you don't need those things. The market maker determines the price, and especially only when a trade occurs. So if somebody comes and buy a currency, the automated market maker determines the price. If somebody comes and sell an asset, okay, in exchange for, let's say let's use TST Ether for example. If somebody comes and buys TST with Ether, the automated market protocol, okay, will adjust the price in a positive direction. Okay, depending on the amount involved. Now, if there is somebody who comes and sells TST for Ether, the automated market protocol, the automated market maker protocol, adjusts the price in the other opposite direction. Okay, so which means which means that this will now determine what the price is, but it's only when a trade occurs. Okay, so on this there is little room for manipulation. Okay, because from external manipulation, because it's only when trades happen that the price is influenced. All right, only when trade happens that the price is influenced. So guys, now that you have it, okay, now that you know about this, okay, I'll still do another video and talk about yield farm, okay. But I just want you guys to understand this, okay, to understand decentralized exchange, decentralized finance, and automated market maker. Okay, when you understand this, you will now understand the impact it has on exchange on for ERC20 tokens like TST, which are new, and what opportunity it gives to investors who want to invest in such in the market, in the trading pair of TST and Ether, or maybe even TMT and Ether. Okay, so in this way, it provides a new income opportunity for people who invest in cryptocurrency, so that it won't just be by just holding the coin and the value goes up. It will also be from earning through transaction fee, okay, from exchanges. Okay, so if a coin is marketed properly, it can have good liquidity providers who will come and invest in order to earn something in return. Okay, in order to earn fees in return. That way they generate passive income by just investing their money, okay, in liquidity pools. All right, so in the next video I'm going to do, we'll be talking about liquidity pools and also be talking about yield finance, yield farm. Okay, because with TMT and TST, I have something I want to share that is going to help both cryptocurrencies to have funding, and most importantly reward those who invested in it. Okay, all right guys, that's it for this video. I want to thank you guys for watching. Until I see you guys next time, take care, bye for now.